Good evening. Welcome to Talk to Satv, sponsored by Grand Palace Hotel and Resort, where we dived into the deep discussions of most pressing global and national issues. Today, we will be focusing on transformation of Bangladesh's banking sector. We will discuss from mobile financial services to open banking, from global fintech practices to domestic reforms. To guide us to these crucial and important discussions, we have two internationally acclaimed experts amongst us. First of all, from my right, Mr. Shaukat Ali, who has been the financial analyst for over 30 years and has been worked with big corporations and investment firms like HSBC, Citibank, Barclays Capital, Merrill Lynch, UBS. Currently, the director of NASDAQ, and already his endeavors are transforming Bangladesh's financial sector. Welcome to my show.
Thank you.
On his left, Mr. Misbah Musabbir, a capital market consultant with 2 decades of experience in governance, risk and regulatory frameworks across Tier 1 investment banks. He brings with him vital expertise in control, surveillance and operational resilience, exactly what Bangladesh needs to modernize its financial sector. Welcome to the Talk to Satv.
Thank you.
I will first begin with Mrs. Shaukat Ali. You have a vast experience in financial sector. So how do you describe the progress and growth of mobile financial services in Bangladesh?
Mobile finance is already in the West has picked up into digital banking. In Bangladesh, the likes of Bikash and Nagad and all these others, they take in that market lead in some preliminary stage banking. But we should move away from that space into a fully fledged digital banking mode. And that needs a little bit more work with the financial institution, the regulators, and the transformations teams in Bangladesh who's looking at that work, driving that forward. And this is where NASDAQ as a team comes in by bringing that knowledge, international knowledge, shares the expertise, foreign knowledge into Bangladesh, working with the local regulators, the 60 banks or 61 banks in Bangladesh, and trying to mobilize that in a distressed situation such we are in at this time. Change is needed, and one of the ways moving forward is transformation through technology. So this is where we are. We are like, with my colleague Misbah, the team in Bangladesh, we are looking at these scenarios, how we could help enhancing that.
Mr. Musabbir, well, what's Bangladesh's current non-performing loan NPL ratio? How does it compare to successful economies? Because we have a huge ratio of non-performing loans.
So in Bangladesh, it was 9%, and it's progressively been getting worse to around 11%. And if we look at, instead of looking at the benchmark of the, let's say, the Western countries, where the advanced systems of regulations and control are, if we look at something like Vietnam, where it reached similar levels, they eventually, over 5 years, put in sufficient controls to bring it down to 2%, which is a lot more manageable. And so something like that is a good sort of target to have, because otherwise, if we're looking at 1%, that may not be achievable in Bangladesh's environment. So we have to be realistic about what we can do so that we have a fluid economy, a successful economy, and something that we can easily achieve. It may take a little while, let's say 3 to 5 years, but if you're pragmatic about it, to bringing down it to 2%, that may be achievable.
Well, UK operates with 2 regulatory frameworks, like PRA and FCA, like Financial Conduct Authority, and as well as Prudential Regulation Authority. So how has the dual regulator model worked in the UK? Because you have a vast experience to work over there. So are there lessons in terms of accountability and oversight that Bangladesh can learn from?
Absolutely. So if we look at the creation of those, it's mostly about investor protection and client protection. So whether you're a corporate or an individual saver and investor. So these models have worked successfully. But however, if we look at the 2001, 2008 shocks to the system, there was a lot of lessons learned.
True.
And we don't learn without experiences such as that, where a shock is exerted on a system, and then you have to learn from that, put in appropriate controls. I have a maths background, so fortunately for me, it was all about mathematical modeling, looking at the numbers. It's all about data. So initially you have governance, you have a framework where you want to operate successfully, you have a vision and aim which everybody wants to aim towards, and the benefits are vast. Instead of allowing some bad practices to happen, suddenly everybody is wealthier as a result in terms of the overall economy. It performs better if we all have a stronger regulatory framework. And the reason is everybody has one benchmark, one standard of excellence that they can adhere to. Otherwise, it becomes a bit freer, and we can't have that for investor protection and investor confidence. So let's say, for example, the economy is stable, then you will find that the credit rating goes up for Bangladesh, where foreigners will be able to invest and lend. So I think that everybody's better off that way.
Zach, you have a huge experience in financial sector. Well, what are the most important strengths and weaknesses of today's banking sector, according to you?
Well, I mean, even at the downtime, if we look at the Bangladeshi banking sector, I mean, there is, although the turbulence time we are in and the downtime, I mean, there is a positive and negative. Well, we could say the negative non-performance loans. However, saying that, those banks are in distress, and I believe there is about 11 banks who is in that category, according to the MFI sanctions. So out of the 11, for the last report we've seen in end of June, out of the 11, 6 of them has turned back. So that is quite improving situation for Bangladesh. And the Bangladesh Bank as one of the tick lists. These banks, if they revive the second round of the 1.3 billion coming towards from the World Bank to this way, what could be achieved. And one of that is like, you know, transparency is one of the issues, compliance and regulatory issues is the other. However, saying that, those banks are performing well. They have a surplus fund that they can't do anything with at the moment, because the reason is that the industry is not taking any loans, so they just sit on that money. The distressed banks who hasn't got any liquid capital within their banks, they're struggling. They haven't got any money. So how do you balance that? Because they need the money, and the other people can't put that money anywhere to invest. This is where the regulator, the Bangladesh Bank, could come in and intervene. They could structure this in a such that the excess capital those banks are holding, they could put it into a vehicle for about X years, months, or whatever that may be, to ease the quantitative pressure for the other banks who are struggling. That could be utilized, so it could be a balanced equilibrium to move forward. This is one of the directives, amongst others, that the central banks should consider. So we are working kind of with the regulators, with the local banks in distress, and the banks who have in surplus, to come up with a mechanism how best way to move forward. Is the situation like that between me and Misbah? It's not new. If we know there is a problem, it can be fixed. The problem is if we don't know what the problem is. So this is a key thing, and we should be working together as a regulator, improving our regulatory framework, compliance, and the procedures within the bank to make it a watertight a transition or transfer of way of doing things into a better mode to conduct the business.
So what do you think, why they are being extra cautious? Why the Bangladesh Bank has to chip in? What the good banks are thinking? And the other thing is that a lot of money has been laundered from the country. Like the loans that came out of, or the money that has came out of the bank. There are reports in BFIU, Bangladesh Financial Intelligence Unit, that a lot of money has gone away from the country. So what's the solution?
Right. So whatever's happened to Bangladesh is in the history of banking, this is the first. So it's the biggest heist ever, the biggest, whatever you call it, the heist, the bank robbery. The money has been taken out of the circular flow of income from Bangladesh. It's been never seen before. So whereas like other countries like Vietnam, some of the African countries, I mean, things has happened. So it's nothing new, but this happens in a very vast magnitude. Like, you know, it is very, very, very difficult to, like, you know, sustain itself as a structure because of the amount of money that's been taken out. That what it does, it hampers the trade and investment. The rating goes down. Therefore, your LCs and all the other issues of getting the products into the country and out of the country makes it a little bit difficult. If the trade is the vital backbone of any country, and if that ceases to stop, the country with that goes down. And I could see some wonderful works has been achieved by our Governor Mansour in that sense of trying to fix some of these issues. It's just a matter of time. What really needs to be done, all these toxic assets from these banks needs to be extracted in a way, so it's put into such vehicle, so the banks are freed up from the baggage that they have, and they could have a clean balance sheet to move forward. Whether that could be achieved by putting into a hedge fund or any special vehicle fund. In the past, there has been government interventions whereby the government takes this toxic asset, so that gives a free runway for the banks to move forward rather than take this baggage and try to intervene themselves. So there are a few things that can be done. And these are dialogues that we should be having with the banks and the central banks itself to move forward.
Thank you. Ladies and gentlemen, we were discussing about how banks could recover, and the SAC has said that we have to identify the problems. We will discuss about much more after coming from the break. Do come back after the break. We are going for a short break. Welcome back to Talk to Satv. Before the break, we were discussing about the gaps that we do have and the importance of identifying the gaps in financial sectors. Now we will discuss about the technology impact and gaps. Well, where and how could innovative technology must help Bangladesh banks? Musabir.
So technology is an enabler. The first port of call is around governance, ensuring that we have the correct framework to provide confidence to people. Technology will enable that, but the first step, I would say, is the framework to ensure that confidence in the shareholders, in the staff, and in the clients, both people within the country and outside. So for example, if you were to send remittance, will your money stop or will it arrive at the destination? So you need to have confidence in the banking system. How do we achieve that? First of all, it's making sure that the process is smooth and it's transparent, so that the person sending it can see at what stage it is at and getting confirmation. Ensuring the money is secure. So for example, hacking, cybersecurity, and any other intervention that may come that will lose confidence of the person using that service. Now, so that's from the user perspective, but there is also the business perspective. Let's say, for example, a bank. Now, what they would like to do, if you're a head of a bank, a head of a division, you want to have information on tap. You want to have information on a granular level. You want to have an explanation of what that is. The problem we face today, which is a great problem to have in the West, is an overload of information, big data as we call it. You can take all that data, slice it and dice it in a way where you can understand it, present it so that you can easily make a decision on what to do next based on certain information. Now, how do we get that data? We make sure technology is at its lowest level, where it's customer facing right from the beginning, all the way the journey right to the bank, so that we can follow the trail of the money and the impact, how much interest someone's receiving, how much interest someone's paying, and what the activities are. So it's granular level data, accurate, complete information. So it's big data, and this is being helped by a whole host of technologies. So for example, AI, people may think that it's overblown, but it allows you to analyze data in ways that you couldn't do before. So for example, previously, we're talking about 20, 30 years ago, Excel, using other access databases, and then we had wholesale systems that vendors provided. I used to build these things, working in the trading floor for understanding the risks. But constantly, the demands increased, shocks to the system increased. You had to have new sort of framework, as I said before, new methods of extracting that information and making sure that information is delivered quicker. But with newer technologies, you can analyze it to identify gaps and potential situations that you may have. So one of the things that I used to do was forecasting in terms of the impact on your liabilities and assets and impacts of certain activities.
Mm-hmm.
There are very few unknowns in life. The only difference is timing and the size of the impact. But these happen. We know these happen. It's a human world for humans, run by humans, and the systems allow us to use technology to help us manage it better.
Well, Sak, he has already said, but just my question to you, that what international fintech practices or regulatory framework Bangladesh should adapt according to you?
Well, one of the biggest challenges to move away from the current situation is transformation through technology. This is the only way. I mean, if we are to move forward, we've got to look at this seriously. Like my colleague Misbah said, AI is something that, you know, is in the very early stage. Mm-hmm. Is something to be reckoned with. This whatever this technology is it can give information is at such a speed that we couldn't even imagine. So when we started the days of my banking 30 years ago, there was no PCs. Like, you know, everything was done manually. We had the fax machine and the telephone. That's the two things needed as a trader or if you're in operation. And those are the operation. At that time, you have to wait for a telex or you have to wait for a fax. But information could travel instantly now. I mean, around the globe, not just in the country. So that is phenomenal. And some of the things that we experienced, I mean, sitting with this local bank, being in Bangladesh, is this movement of information. So now one of the bank that we sat with, I mean, they don't know what's happening on a live instant dashboard or information, what's happening in their local branch. Some of these banks have about over 300 branches. And by that time that information gets to the MD or the chairman, it can be a time issue. If that information was available instantly, they could have made this business decision in a way that it would be more appropriate for the bank and would be more beneficial. So this is where technology comes in, and it really enhances the situation. If I could give you an example, the global SWIFT has given Bangladesh 3 years to move from the old messaging system MT to MXL, which is AI enhanced. And this deadline, the 3 years deadline, is approaching 22nd November 2025, which is just around the corner. Now, saying that, 32% of the global, it's a global mandatory work that needs to be done. Is a mandate. So it's a global mandate, and only 32% of the bank globally has done this change, and that's predominantly in the West. So banks in Bangladesh, the African countries, Middle East, some of the other subcontinent countries are really behind on that situation. And as we've been speaking to our regulators, they gave Bangladesh banks a deadline of 30th of June to see where they are of this transition. So if that transition doesn't happen, there's three things could happen. One, I mean, if the bank loses their SWIFT ability, they weren't able to operate as a bank to do their normal transaction. So it's a very risky business for a bank not to be in compliance. Two, they will get a hefty fine from the SWIFT to use that service. And number three, they could go directly with SWIFT, I mean, to make that change, which is going to cost banks in the millions. So NASDAQ came out with this adapter. It gives a quick solution to for the banks, and this adapter sits between the SWIFT and the core banking systems, and it translates the messages back to forth from the old to the new and new to the old. So this is one of the solutions that we're working with, and we're working with the bank, and some of these banks has adapted. And I think there should be more initiatives as such should be taken for Bangladesh, working with the our NRBs, so we get that knowledge transfer into Bangladesh. And help assist these banks that we have been helping the Western banks, with the likes of our Indian counterparts, the likes of TCS, Infosys, and all the other big consultancy firm, we actually in London have trained these teams of people. They came to India and they provided this service to us. So we could do the same for Bangladesh.
That's wonderful.
And that's something that we should be really considering.
So are the bank being dynamic enough to adopt the system? What are your experience? Because we have like more than 60 banks.
I think there is a knowledge gap. So therefore, like, you know, we got to work with the banks to bring this this knowledge gap up, understand their business, what they are, understand the best practices are out there globally, which we could help with, and adapt a situation whereby we could work together and bring that level of knowledge and understanding to an international level, whereby banks can operate in a peer level with other banks in the West.
Ms. Bang, you were working in governance, risk and regulatory framework across Tier 1 investment banking, and you have a vast experience like of 2 decades in working in this sphere. So what do you think about the cybersecurity in banking sector in Bangladesh?
Unfortunately, it's the investment in cybersecurity is low. Now, if we look at the threats that are coming in, it's increasing in volume, and naturally, because as a hacker, you have now automated tools to continuously attack your target. There's creative methods, there's mimicking, and sometimes it requires someone from the inside to assist. But there's a whole host of approaches that these guys are taking. Now, it's like cat and mouse. Someone's always ahead, someone's always behind. But you should try and narrow that gap between someone committing a crime to someone preventing a crime. We may not be able to totally eliminate it, but we need to invest so that we can always be either very close or, if we can, be ahead of these attacks coming in. Now, I've worked in banks for several decades. There has been numerous attacks, even me watching this live in my business where I am with colleagues, and there's continuous testing done on the resilience of the team, of the systems, and on the customers. And from a user perspective, working there, it is irritating to be disrupted in my day-to-day business. But however, it's like having a wall at your home. You want to see open fields, etc., but the walls prevent bad things from happening. So like that, we need cybersecurity. You need to invest in your security. So let's say, as an example, a threat that materializes into something reality costs you, let's say, 10 crore. If you could have prevented that by investing 50 lakhs, that would have been a worthwhile saving. So at the time, you might think that's a wasted effort, but with the constant attacks that are coming in, that might have been your best investment. So as technology enables mobile, which is essential for a growing economy, a fast growing economy, you want the economy to be fluid, liquid. Now, with these threats coming in, you also need to have a secure environment to enable your customers, your staff, and foreign investors to have confidence that you have a resilient system.
True.
It can be done.
Ladies and gentlemen, we were discussing that there is a lack in the cyber security investment. So we will discuss a lot more about it after coming back from the break. Do come back after the break. Welcome to Talk to S.A.TV, sponsored by Grand Palace Hotel and Resort. Before the break, we were discussing about the gaps that SAC brought up, the kind of knowledge gap that we have. So what was the reason for that? Because the person who are running the bank is old school? What do you think? Like in case of cybersecurity, because a lot of money has laundered from this country because of the cyber attacks.
So yes, very interesting question, and like what my colleague said, I mean, on the knowledge, we got to bring the knowledge up to in a way that is knowledgeable for the senior colleagues to come up, like MDs, chairmen as well, to understand the banking and the international banking, how it's operating in the West. Saying that, one of the main key question, and a very important one, what my colleague raised, and then yourself, the cybersecurity. Now this got to be taken much more seriously in Bangladesh. There's over in 2024, 3,000 cyber attacks happened in Bangladesh on financial institution. If we could call the Shunali Bank cyber attack as well, one of the biggest on a government-based bank, happened in Bangladesh. So we got to be very, very cautious. We got to, like what my colleague said, we got to invest into this thing. So it's once these attacks happened, it's too late. Then it's millions and millions of attackers being lost by that time. So preventive measures is always better. And to do that, we got to train our staff in Bangladesh, train our senior colleagues in Bangladesh, work with the regulators to bring up to speed how important this piece of work is to secure the banking system, financial institution, not for the institution itself, for the general greater public of Bangladesh as well. So then this is not only for financial institutions, there are some other industries as well that we should be looking at. This is where, like, fintech company like Nasdaq or other companies around could play a vital part in achieving that. To do that, there are like very advanced cyber security attackers, especially in the Western world. They're more advanced in that sense. To mitigate that, we got to be on par with these people in assuring that these kind of things doesn't happen. Therefore, that knowledge and expertise of our people are needed to be trained in Bangladesh as well.
But why they're not investing? Do they not know that they need investment, or don't they have the capacity to invest?
I think it's more of lack of understanding. Because if they understand, like, if I've got a bigger picture to lose, then I will do something about it. Because technology is a thing that you can't see. Until it happens, you can't see nothing. So, what's in a laptop, what's in a computer, you can't see what's in it. You could only see what's on the surface. It looks like a laptop. But this is an example. So within the system, you can't see until this attack is happens or happened. So, post the event, you could see what's happened. There's a lot of damage. But until then, there's nothing to see because this is all internal, everything happening.
What about the role of the central bank, as a Bangladesh bank, as a regulatory bank? Are they not aware of the fact, or they are not? What about the transfer of information? Like
they are very much aware, because this is one of the tick boxes highlighted by the International Monetary Fund, as for the regulator of a central bank to be compliant and cyber security safe. Is one of the clauses. So they are taking this thing very seriously. They are working with the local banks. I think it's a mixture of everybody's being educated and understand. So this is where we come in. We in the Western world, these kinds of attacks happen. They invest millions of pounds or dollars into making sure these things doesn't happen. We've been involved in every 3 months for our banking environment. We got to do this training, anti-money laundering, cyber securities issue. So we are pretty much up to date. I think the Bangladesh, what they should adopt is a scheme for all employees within the bank to be educated. In Europe, in England, we do it every 3 months, maybe every 6 months or once a year, to bring people up to speed, because technology is one of these things that changes very fast, that to keep on top is very difficult as well. So you got to always think one step ahead to mitigate any risk that's coming today.
True. Misbah, you have been in regulatory, framework. You're working with regulatory framework over two decades now. So, had you been posted as a Bangladeshi banker over here, what would have been your strategy to mitigate this problem?
So, I would answer that by talking about my learning experience over the two decades.
Please.
So, when you're dealing with the financial markets, you just look at the pricing movement of, let's say, currencies, bonds, equities, and you look at the profitability and the risks associated with that. Then, when I moved over to credit risk, I realized that the exposure to your counterparty non-payable loans, or people's commitment to you, if they don't pay, the risk is bigger. But as time went by, one of the things I learned is the greatest losses that come to a financial institution is an operational loss of control, not from market activity, but losses from cybersecurity, loss of internal controls. And so my priority, if I was a banker in Bangladesh, would be making myself operationally resilient to cyber attacks and having internal controls, so that management, especially board level, who are accountable to their shareholders, to their customers, to the regulators, they need to show commitment and confidence to all these parties by ensuring that, first of all, you're compliant in a technology that delivers the information to the right people, and then you provide the information on time so that you can make appropriate decision. But more importantly, having that resilience so that your bank is safe, your customers are safe. So if an attack was to come in, whether it's cyber or internal or some other mechanism, you can mitigate it as much as you can. The best we can do is the best we should do. And if you let your guard down, there will be an opportunity for someone to cause a little bit of damage or more.
What about the diasporas of Bangladesh? Like the Indian diasporas, the NRI, these communities are basically contributing a lot in their financial sector back in their home country. But what about Bangladesh? Because when we go to West, we see that we are divided into like Awami League and BNP, and we are always engaged within our problems. But when would the Bangladeshi diaspora would be dynamic enough or speedy enough, like NRIs, like non-resident Indians, to contribute to their financial sector?
Well, it's a very good question. I mean, there's two factors to this. One, the NRBs. I mean, they have the willingness and passion to come to Bangladesh and do the work. But when they do come to Bangladesh, there is a resistance. There's a barrier to penetrate through
the harassment as well.
Well, I mean, whatever you might call it, is these barriers of difficulties. So if we could eliminate some of these barriers of difficulties, I mean, one of the things that our honourable advisors doing is calling our NRBs back, and he has given us the opportunity, that window, to sit here with you and share our thoughts. This opportunity, I mean, if we say last year, maybe it wasn't available. I mean, to do this kind of things, or even to talk to the central bank or the local banks doing that work. So that's one factor. So if that barrier could be eased, we could work together, making a better Bangladesh. Saying that, coming back to the NRIs, how they done things in the early 2000s, I remember. The Indian government actually took an active decision to recompensate some of these NRIs. So at that time they were given incentives like £10,000, £20,000 for the NRIs to come back to India. So that gave us a big boost and a drive for lots of these Indians, whether it's techie, banking, to come to India and settle themselves in India, whereby they were given other incentives within the country from the government, and that was the migration inwards.
We have given tax exemption to the remittance as well.
Of course.
But still it's not working. Is it because of the mindset, or you guys who are internationally acclaimed connoisseurs of finance needs to engage with the diasporas as well, and to motivate them, to make them aware of the fact that there are larger interest if they invest back in home countries? So
this is one of the things that it is happening. I mean, our Middle Eastern counterpart is one of the biggest inward of funds coming into the country. But I think if we could make a good ground for reinvestment into the country, I mean, there would be more. So one of the reasons from the West, US, Europe, UK, is because of the second, third, fourth generation. These generations are losing interest in Bangladesh because they come over here. There's obstacles. They can't function properly. They can't move freely. There is a security risk. There's law and order issues. So all these obstacles and things, which is contributes for the people coming to Bangladesh and doing the activities, whether it's holidays, whether it's investment. So if these obstacles could be eliminated in a way, working with the government, with the NGOs, local governments, to achieve the safety of these people and attracting these people to come back, I'm sure some of these people they will come back. India's done it. Some of the other countries like Malaysia's done it. Bangladesh can do it. But if we have this passion and the vision moving forward, what we want the best for our country, then we could achieve that.
Misbah, according to you, what are the incentives that will drive the diaspora's, involvement in the country's economy?
So Sachs mentioned about some of the obstacles. Now, and he also mentioned that the third generation is losing interest. So, for example, I speak to my family members, my children, and they're not resistant to the idea, but they ask why. And I think, why should we go there?
Exactly.
So there's a lot of reasons to visit Bangladesh, not just family, not just the sheer beauty of it and the culture, but there are investment opportunities. So, for example, we could consider ourselves an emerging nation, still, even with our large GDP growth over the last several decades. So there are investment opportunities. However, we need to protect our capital against losses that are operational. We may say that. So if there is a better framework for us to operate in, then there will be more inward investment, more people coming in and investing their time in it. So, for example, my friend here sort of asked me on Friday if I can come along and meet some of the banks and the central bank as well. And I thought, wow, okay, if they're open to such ideas, I'll just fly across. So I came on Saturday, as you know. And the reception has been incredible. Yeah. So, yeah, there is a knowledge gap. And yes, there are sort of participating in a lot of activities, projects, but the enthusiasm I saw was quite encouraging. It's something that the population generally doesn't see, but my conversation with my friend here with these banks is that they want to make change. Sometimes there is a knowledge gap, but there are limiting factors. So, for example, lack of liquidity and training their staff to be able to do that and be creative. So this is where people like us and many others can help with bringing new ideas or sort of latest ideas in terms of sustaining a growth in investment into the technology so that banks can operate efficiently with a full framework of getting information from the ground to the senior management so that they can be totally responsible and react appropriately to the information that they need to make those decisions. So I am confident in what's happening. I was quite encouraged by speaking to the bankers over the last few days. And when I go back, I'll encourage my colleagues and many others to have a look, find opportunities. You can call it let's say helping Bangladesh, but we can call it investing into Bangladesh. Yeah, I will feel proud of it, and in my conversation, I will feel safe to do that because the framework that the government and the banks that are trying to operate is that they want to build a prestigious brand of foreign investment and building confidence to their staff and their client base. So very, very encouraging, I'd say.
Okay, Misbah, if the reforms take place that you have suggested, then how would the Bangladesh banking sector would look like? My last question to both of you. I will start from Misbah.
So the NPL issue is like a shackle to the banks.
Mm-hmm.
We've seen in Vietnam, it took about 5 years. In Bangladesh, it may take longer. So it's got to be, first of all, a framework for all the banks to operate in. So I'm using NPL as one example, but reality is it's across the board in quite a few other aspects. So let's say auditability and accountability, all those aspects. My view is if there is a framework given by the regulators, there's enforcement so that there is an incentive to perform well, I would say given 5 years, this is achievable, but it's all about governance and enforcement.
Sack.
Very good, very interesting question. I mean, like what my colleague Misbah here said, we was at the central bank sitting with the innovation team, with the regulators of their vision, the next 5 years vision, what they should be doing. So this is very interesting. Bangladesh is working on the upward trend. thinking about these things. We're having more meetings with the central banks in achieving these goals. And we spoke to a lot of subject matter experts within the regulators. They got a wealth of knowledge, but they just need that technological know-how and the move to forward. One of the ones that we've been discussing is how to have a ecosystem of central processing, whereby banks could talk to the central regulators directly with a mechanism of of advanced technology. The reporting comes easier, the monitoring comes be easier, the surveillance comes more easier if they are centrally connected. This is a bigger piece of work. We're not going to achieve it overnight, but the passion and the willingness of the central bank is there to work with the local banks, and this is where the foreign input, like the NRBs, ourselves, come in to achieving that. One of my passion is always been as a banker in 3 decades, is because Bangladesh currently is a one-way currency, so you could bring much money as you can into the country. But you can't take it out. So this is a problem.
It's a barrier.
Is a barrier. So we can overcome this by technology and the knowledge sharing. I mean, what is the ingredients needed to overcome that? I mean, we need a settlement mechanism. We need a custody and tech domination settlement process. That's all we need. If we could tackle that, put all the due process in place to mitigate any anomalies of money moving in an unusual method, we could also achieve that. It's not an easy piece of work. The regulators put that obstacle in place for a reason. But that was done some time back, and if we revise that, we could move forward on making it an international currency, the taka.
Thank you, Mr. Shaukat Ali and Ms. Musabbir. Thanks for coming to our show.
It's been a pleasure.
It's an absolute pleasure.
Thank you.
Thank you so much. Ladies and gentlemen, thank you, Mr. Shaukat Ali and Ms. Musabbir, for sharing their valuable insights regarding global perspective on evolving landscape of Bangladeshi banking sector. We have seen how global best practice and strong regulatory frameworks and technological innovation could come together, and they've said how Bangladesh banks needs the indispensable investment in cybersecurity and the other initiatives that should be taken to progress the bank sector. Basically, they have also shared their concern about the lack of knowledge that we do have, not only about the cybersecurity, but also with the regulatory framework as well. As Bangladesh looks to modernize its banking infrastructure, the roadmap must be built on transparency, accountability, and strategic vision, powered by technology, guided by experts and leaderships like you. So we will expect the experts like them will come to this country again and again to help modernize our banking system, and they will help us to build a better and prospective nation and prosperous nation. Ladies and gentlemen, we will come back with another guest in the next week. Until that time, goodbye, Allah Hafiz, from Talk to Satv, sponsored by Grand Palace Hotel and Resort.